When it comes to a company like NVIDIA, really try to imagine the world 3, 5, 10 years into the future. Think about the products and services you use and how technology might impact them. Then ask yourself if NVIDIA is driving that change and if they stand to capitalize from it, because that is where the growth is at and that is where the money is at. Okay, NVIDIA's highly anticipated earnings dropped last night. We dove into the report, put together a couple of game notes for you as you evaluate the stock and the AI infrastructure market. First up, the stock. After all the hype, there's basically no post-earnings movement. If you haven't been paying attention though, it's still up 30% year to date, 44% over the last year, and 285% over the last 2 years. The PE is 40 and it has a market cap at a staggering $4.4 trillion, the most valuable company out there. Let's talk about why there was no movement post-earnings. The high-level takeaway here is that they came in right at expectations. They technically beat on revenue, coming in at $46.7 billion versus the $46.1 expected. Same thing with earnings per share, coming at $1.04 versus the 98 cents expected. But they missed on data center revenue. That is the bread and butter of NVIDIA's business. 88% of their revenue comes from this segment, and they missed by 1 or 2 percentage points. Let's zoom out for a second and take a look at what else is going on, specifically with their China business. The way we think about it, chips are like the new oil, so there's a lot of geopolitical tension and policy around who manufactures it, the dependency on it, and how it can be used to develop an economy and or military. That's why you see the government doing things like putting export controls in place, special taxes, and taking equity stakes in companies like Intel. While NVIDIA isn't forecasting for it, those export controls are lifted and that can yield about $6 to $7 billion of additional quarterly revenue. The question here is whether or not the Chinese are going to resume buying, as there's been reports of them intentionally avoiding NVIDIA due to the political fallout. Last thing, and thank you for tuning in. Appreciate you all in the Wall Street Game Notes community. We are watching the hyperscalers capital expense number. Those are the big customers for NVIDIA, and if that CapEx number starts to change, it will likely impact NVIDIA's revenue. We are also watching NVIDIA's gaming business. While it is small compared to the rest of the business, it is growing rapidly. Notice that in the AMD call as well. Also, robotics. Really bullish on the use case for autonomous vehicles and the growth potential there. Remember, this company continues to record and forecast record revenue. The margins on this business are massive, and they will continue to innovate and lead the category. Let us know what you think. Be good.